The Headless Horseman here. It's May 25th, 2023. This is my second video today, if I upload the first one at least. Anyway, I just felt like doing another video. Excuse me. And, first of all, just highlighting some stuff that, again, it just comes down to common sense. I saw this tweet, which I think is great. It's like, his what he writes here. Given the Nvidia valuations, I think it's worth sharing this anecdote from the 2000s. At its peak, the Sun Microsystems stock hit valuation of 10 times its sales when the stock took a massive beating later on. This is what the CEO Scott McNeil had to say to investors. Basically, and of course, one can't say that Nvidia is the same as Sun Microsystems, because like always, typically high growth companies, etc., will look expensive at all times, kinda. Because it's, 1-2 years later, then you figure out, hey, it wasn't that cheap back then, given where they were headed, etc. But still, some stuff, risk reward is constantly there. You can't pay, there's not, there's no limit to how much you can pay just because it's a growth story. And I don't know if Sun Microsystems was a growth story, but I recommend you just, let's say, pausing the video and reading this, because this is, kind of hilarious. The CEO kind of goes through how just absurdly expensive his stock was. And of course, that's the marginal investor setting that price. Somebody literally bought a company which would have to pay back 100% of its revenues in tax-free dividends for 10 years to be a P10 stock. And he just goes on to say, and like his ending conclusion here, do you realize how ridiculous those basic assumptions are? Meaning that's like the valuation. You don't need any transparency. You don't need any footnotes. What were you thinking? But again, that did not stop the market, Mr. Market, from pricing this company at an absolutely absurd level, which you, like he said, what were you thinking? You have to be an absolute idiot to be buying at that price. And of course, we know what happened after the 2000 bubble, when tech burst. Nasdaq did not go down. Nasdaq went down 70%, and then it took, 8-9 years for Nasdaq to get up to that high again. It was actually 70% lower, I think, 9 years or something from after it topped. That's why, like in the last video, mean reversions. It's a matter of when, not if. When, not if. The more absurdly high they get, or more absurdly cheap they get, the more they will go down, or the more they will go up. When the actual mean reversion starts, which you never know. You didn't need to pay, this much for this to be look like a bad buy. This was expensive. Who knows? Like, at half this, it was probably expensive. So it's like things can go on longer than one thinks, because obviously, in my opinion, the juniors, and especially the high quality juniors, because let's face it, most juniors have a long-term value of 0, but it's like the junior sector overall, and the good juniors especially, they have no business being this cheap. They do not reflect mining sector that will even be needed or around much longer. So it makes absolutely no sense. So it's the opposite of this, but I thought it was a good example just how and in this case we're not talking about some theoretical junior explorer which might have the next Voices Bay or anything like that. This is, 39,000 employees. You could obviously look at a balance sheet and cash flow statement, etc. It's not like there was, some miraculous thing right around the corner. This was just absurdly expensive. But it's the flip side. We're seeing the opposite right now in the mining space. And that's not, even though you should, I think, have the mindset that, hey, this should switch, turn around, mean reversion should get going any day, starting today. But these things can go on for quite some time. But obviously, assuming one could short a stock like this, the higher it went, and let's say you could short even more, you end up obviously making more from higher highs. It's the opposite of why I'm just continuously buying the cheaper something gets, because the coming mean reversion for that extra dry powder, that extra buy, is the future returns just get used up. So let's say you have, you're down 50% and you in your portfolio, and you can add 5% whatever, and maybe those add 5% you put in the portfolio you buy shares for. Who knows? Maybe they'll have a future expected return 400%. Obviously, a 5% top up if it goes up 400%. That's going to have meaningful impact to your portfolio. And obviously, if you're down 50%, we've seen. There's countless examples of being down 50. I'm down 50% in my median stock every other year. That's just what this sector is kind of all about. 50% down is that's easy. That's easy. On that note, just look at Great Bear. This is one of the, most well-known success stories. But even after the discovery hole, etc., even when it started, okay, they made a discovery, now we know there's something there, and it ended up we now know that, hey, they, drilled and drilled and drilled hundreds and thousands of meters, and, it got bought out. But look how long of a time frame or how many periods you actually see sideways to down action. That's the weird thing. This is a 10 to 20 bagger from the discovery here. One of the greatest success stories, or from a time perspective, if we look at medium term trends, there was more time when this stock performed poorly than good. The rally is typically, okay, this is a ripper here, and then it just goes sideways for a long period of time. Ripper here, really good movement, but there were some, dips in between, obviously. I don't know. Yeah, 15% dip. You can see people get scared shitless or start to complain if they see a junior, even in this sentiment environment, that's down 10%. Even though it's you don't need much explanation, people are just dumb. But my point is that's you have to start, you have to get patient, or patience and buying as low as possible. It's I showed in the, I don't know if I have it up actually. I guess not. The Patriot Betterments. But this is one of the, let's say, quickest revaluators, if that's even a word. This was just obscenely quick. It went up obscenely quick because sentiment was high in the lithium. Lithium has been hot. So you had a rising lithium price. You had a red hot sentiment for lithium juniors. So when they created value, at least, in this time frame, they got rewarded for it. If the same exact, let's say, assay results, even the same lithium prices, if sentiment was worse, it wouldn't have gone up that much. That's just, it's basically, one could see it like a channel, I mean, this is obviously a hot, but it's like same exact news releases, etc. There might be a huge swing in, like, you know, what it's going to trade at any point in time. It's like, you just look at Great Bear. This was the flash crash of 2020. Absolutely nothing changed about the Dixie project. There were no drill holes that got undrilled or anything like that. Sentiment, panic selling took it down 60% from the top. It is just absolutely mind-numbing how much price can change when nothing else changes, really. I mean, again, it's like, I don't have the news release here, but I think there was like a news release here which said, hey, we hit spodumene bearing pegmatites or something in all holes. I mean, that sounds like a pretty good news release, right? And this was just at this point, it was the drill start. So it's kind of funny. It was the opposite of a drill hype in a sense. I mean, the hype kinda had already happened, I guess. And then it's like good news, and then I think, I don't know exactly when they released positive news, but still, here they had no additional information. Here you have information that, hey, we hit spodumines in all holes, and then you have, you know, discovery holes here or here somewhere. But I mean, the price didn't follow any. Does this suggest that that it's following any kind of I was going to say fundamentals? This is the drill start. What happened? It's like, you know, did they drill to the center of the earth? Did they? No. We later knew or learned that, hey, they hit spodumene in every drill hole. So it's like, my point is kinda with stories like this and like volatility in sectors like this and stuff like this, 60% flush. Yeah, you can't really take this market too seriously. Like today, it's like bank bailout facility usage hits new record highs. Money market fund inflow soared again last week. I don't exactly know what that means. But like, doesn't sound too good. Doesn't sound like it's too stable. But it's like, okay, you're sitting there with like, you know, I own gold and gold juniors. You're like, yeah, I mean, you know, I love where I'm at. I mean, I love what my portfolio looks like. And look, doesn't really care. I mean, somebody's bidding up Nvidia to like 200 PE, and somebody bought up Sun Microsystems to like, where even the CEO is saying, what were you thinking? You have to, it's like, this sector is, I mean, well, markets overall on a short to medium term basis, it's a complete joke. What was the signal here, let's say? The deposit kept on growing. But I mean, if you just looked at this time period, nobody would be bragging that they own Great Bear. People, I'm assuming there was a lot of trolling, etc. I was like, yeah, this stock sucks. I mean, it went sideways to down for quite some time. And this, like, yeah, you wouldn't be happy looking at this, or somebody would look dumb looking at that. But it's like, from every single low here, the returns were higher. Why? Because the signal was that, hey, this company is creating value. So every single dip was a great opportunity to add, because the signal was still that it's going up. Same in Patriot Battery Metals. It has just grown and grown and grown. Now it's like the largest lithium deposit on hard rock deposit on Earth or something. Signal, they created value. They were drilling, and that their deposit grew and grew. Great Bear grew and grew. That's the signal. And then you have a batshit crazy market in the meantime. And of course, like what typically happens, and you can see that in a bunch of stocks, it's like, let's say you're early in a stock. I like this stock. Okay, buying this stock. And you talk about it, you still hold that stock, etc. Sooner or later, even in a stock like this, which was a rare success, I mean, let's say you talked about the company here. It's like, yeah, you like Great Bear, I'm buying that, and it dips, and you buy that, and it's like, yeah, I'm still bullish, whatever. It's like, you're gonna get a ton of shit for this stock. Oh, this guy's, bullish Great Bear. Because typically, I mean, I see it all the time. Even if you're like, I think this stock is pretty cheap, so you start buying, or you start talking about a company when it's, really cheap. And let's say it goes up, but nobody cares back then. I mean, it's like, I can name quite a few, and I'm gonna name quite a few, which I think just are absolutely dirt cheap from a risk-reward perspective. Meaning, it should not even be possible. The bets or the risk-reward is so good that we shouldn't even be able to take bets like that. There should be nobody willing to sell those good of a bet. But they are. But the point is, even in a 10-bagger story or 20-bagger story like this, huge amount of patience. And like, I mean, if it makes sense to buy, a trading sardine on the cheap, my Bear Creek chart. Obviously, dip buying in an intact growth story is even better, because you're like, yeah, okay, let's say buy here, so maybe you get a 50% discount on the actual value at the time. But unlike Bear Creek, this actually is growing, so it's like that this 50% discount here might have been, it was like I don't know, 80%, 80-90% discount up here. Pay to wait. The signal was that this story is intact. Whatever they drilled up to this point, it looks like they could find more gold. And they did find more gold. And then, of course, it's like we go into a poor sentiment environment, 2020 here. Then, when did... I don't remember exactly when the juniors topped sentiment-wise. But yeah, okay, so it went down with a lot of juniors. But it's like, this is not the worst downtrend, obviously. And it's like, if you just bought here, when you're here, you're still in the green. Yeah, it's frustrating to look at, but it's like, this is outperformance. Just not going down 80-90%. That's still outperformance, because when it gets going again, like we see here, I mean, when the revaluation happens, because they have created a lot of value, so the signal might, if you just drew a trend line like so, it's like, okay, too cheap, revalues, too cheap, revalues. But like in the Bear Creek scenario, majority of the time, the sector is going nowhere or down. And even in a growth story like this, the rallies happen in quite a short time frame. I mean, how many didn't throw in the towel here? And then all of a sudden, boom. The longer you can see the trend is down. So people are net selling over this period of time. And the price is, lowest here kinda since back here, a short dip here. And then boom. And like I've said, it's like they probably had created more value here than here, but price was the same. And then all of a sudden, whoop, right, okay, market all of a sudden gave them credits like, this is unsustainable, because obviously it's like, if people sell here, it's like, they only have like, 500,000 ounces or whatever. It's like, I'm okay with selling at this. But let's say it looks like they have, 2 million ounces all of a sudden. And the price is the same. I mean, it's getting harder and harder not to get somebody to buy, and harder to get somebody to sell. Because sure, if you sold because you thought, hey, they might only have, 500,000 ounces to a million ounces, whatever, it's like here. But it's going to be harder to sell here if you're like, they probably have 2+ million ounces. And then, it kept growing, and then obviously the story changed. Like, they might have 3 million, they might have 4 million, yada, yada, yada. So it's like, there's obviously nothing more there's nothing more profitable than dip buying growth companies. or companies that end up growing, because you don't know. Nobody could guarantee that Patriot Battery Metals would have the best or largest hard rock lithium deposit in the world, or one of the largest. Absolutely nobody. But I mean, as long as the deposit was open and it's, you know, the mean news, let's say, was that, hey, this looks to be growing, and, you know, the news release states this is still open, or we have more targets. That's just obviously, okay, there's more upside potential, there's more upside potential. And that's why when, which I will go through soon, if you're like, I don't know, you know, a discovery hole is made, let's say, here, and you have a position, you're like, okay, I got my 100% pop here, so I'm selling out. Hey, I mean, I get 100%. Maybe almost no other company is green in your portfolio. You're like, I'm gonna sell out. But a discovery hole is the start of something. Without the discovery hole, you know, this stock would not have gone like this. Then it would have gone like this forever, until they made a discovery and could go up. Anyway, but the idea is that, okay, how, you know, when people talk about 10 baggers, etc., I mean, how many people do you actually think that even if they buy a stock that goes up 10x, how many do you think actually get a 10 bagger on the capital invested? Because let's say you Great Bear here. Let's say you have a 2% position in Great Bear. It doubles to 4. And then you sell, you know, 70% of your holdings, and let the 30% that's left run. That's not gonna. If this becomes a 20 bagger, you will not have 20 bagged your capital. If you sell, like, I don't know, 80% or whatever back here, I don't know how many. I mean, I'm too tired to do the calculations in my head, but it's like, yeah, maybe you get a 4 bag or whatever. So it pays for 4 other stories. I mean, that is one of my, I would say, problems. Or have been. I've taken money off the table too quickly. Except for, like, well, that was actually too quickly at a time, because I'm thinking about Novo in 2016-17. I had 30% of my portfolio in Novo at the time. I don't remember exact, but it's like 60-70 cents or something. And that went up 11x or something in 2017 or something. And I had a limit, like, you know, I can't have more than 30% in one stock, especially since I didn't fully understand what all the hoopla was all about. I didn't know anything really about with Waters Rand, etc. What the, you know, price, what the potential price was. But that's another. I mean, that's a different example. It's not like, but if you have, like, I don't know, 0.2% or something. I mean, the whole idea of it's like this portfolio, for example, it's like, okay, if one of these in 3 years becomes a 10 bagger, it will pay for 10 of the other picks that go to 0. But if a company becomes a 10 bagger, one of few, let's say 1 in 10 actually becomes a 10 bagger, they made a discovery, things are going well, and I sell half after a double or something, or sell half after a 50% return. And that's the only, let's say, success story that ended up being a 10 bagger. I'm not going to be able to pay for 10 juniors that went to 0. So, I mean, it's interesting, you know, you hear the let the winners run, don't forget to take profits. I mean, like always, stuff like that gets thrown around depending on what actually happened. If Great Bear grew up until this point, and then it, you know, found out, like, oh, well, there was some high grade lens or a load gold, whatever. It was, you know, patchy, limited, whatever, and it would have gone back here. Then people would obviously say, yeah, don't forget to take profits. But when it turns out like this, you'll hear, let your winners run. That's one of those funny like sayings, like, yeah, but which is it? Should I not forget to take profits, or should I let my winners run? Because if we're just thinking, it's like, how do you even get that 10 bagger? You need to hold a stock for 3 years, let's say, on average. I think Rick Rule says 3 to 5. People can barely hold on an extra day right now, even in totally intact store. If Great Bear was trading right now and we were here, it would be very hard for people to buy and not sell. Even it's like, might be totally obvious, case is intact, it's cheap too, could grow more, would be very hard. But think about it, it's like, if you, the whole idea of, like, let's say a 10 bagger high risk high reward plays, that if this one works out, it could pay for a bunch of others that did not. But if you like take profits here, it's never ever gonna become a 10-20 bagger, not the capital invested. Sure, you get bragging rights. It's like with Snowline. Sure, it's like from when I talked about it. It's like, it's not like I found it, but obviously coming from Quinton, and I actually did talk to management quite early on, and I liked the story. It's like, yeah, from that, let's say, bottom time, whatever, yeah, it's like a 10 bagger. I think it went to what, $4 and something. So maybe a bit more than a 10 bagger from the actual bottom. But it's like, I didn't have a full position at that time, and then just let that ride 10 to become a 10 bagger. I took a very large position much later on. It's like, okay, the question is, where would Snowline be here? Maybe actually, given how quickly paced the drilling at Valley is, given that it's a disseminated system, maybe we're here somewhere. And this is where kind of where I, you know, really double down. Because I put out that article on Snowlines, like this is, I think I wrote that it's my second largest position or something like that. So I was like, even if Blue Sky does not materialize, I have no doubt this is probably going to be a very large deposit, good grades, etc. I just didn't see that story imploding, given how the good early results were. Was that smart or not? Well, you can't just look at the results. I mean, in a Blue Sky scenario, Valley would be 40 million ounces. It doesn't appear to be 40 million ounces. Not at least not so far. And I don't think it will be 40 million ounces. But the case was that it's like, I think it's at least going to be 8 to 10 million ounces. So again, that I like those kind of, you know, bets. It's like, you could miss the Blue Sky by a lot and still win. So Snowline was one of the major breadwinners in my active portfolio. One story, because I had such a huge stake in it, because I thought the upside was high and it was probable. Before you have a discovery, there's nothing probable about it at all. Before a discovery is made, a company doesn't even have a growth curve. That's why it's like, one rule to follow, I think. It's like, if you want to immediately increase your long-term results, is to stop going for pre-discovery plays. I mean, I own a few, but most are not pre-discovery plays unless there's, you know, really a good reason. It's like Goliath. It's like, yeah, when you have outcropping mineralization like that, and it wraps around a mountain, and you can do trenches straight into the actual, you know, the actual ore zone or pay zone, the actual vein or structure, yeah, that's a different story, because you literally have the ore body outcropping. But I guess, yeah, the point is, again, it's like, forget about the get rich quick things. You see evidence here. You need, let's say, 3 to 5 years on average to even get a 10 bagger. You need to ride, well, if you take half, even if it goes up 10 times, that's not going to be a 10 bagger, if you know what I mean. Not on the capital invested, so it's not going to pay for 10 other stocks where you put in the same amount to begin with. But I'm not saying, at the same time, I'm not saying it's like, yeah, you should, ride everything with a super large position. But it's like, I would say Snowline is much less riskier now than it was a year ago from now. Sure, Blue Sky didn't perhaps materialize, but B2 has already said, hey, we think you already have a mine. Kinda. So there's less risk, and it's obviously the same thing here. It's like, if you let a winner ride up here, yes, there's less upside potential left, because it's already priced in a good chunk of a Blue Sky scenario. But here you knew that you had something probably worth mining. You didn't know that back here. So if you just let it ride and the position is larger, yes, upside might be less, but it might be more probable. The downside might be less probable, because here it might not have reached a critical threshold yet. So it's not before it's obvious that it becomes a mine, let's say, or could become a mine. Let's say you're in if Snowline, for example, if we thought Valley is like 3 million ounces, that's probably not going to be looked upon with favor given how remote it is. And in Nevada, if you found that's like, Jesus, this is a success. It's going to be sold for like $1-2 billion. But up there, you need something bigger to get it over the critical threshold. Is this even a threat of becoming a mine? So it's like, once you pass that, or think you'll pass that, then it's like, okay, now you have some, margin of safety. This is a, mine-worthy deposit all of a sudden. You didn't know that back here. You don't know that after a single drill hole, obviously. So, if you just let it all play out, yes, your position would grow, your exposure would grow, but it would also become increasingly de-risked. So it makes sense why it would be okay to have a larger exposure. Whereas like what people typically do, and what kind of I did, is like take a big fat position before a discovery is even made, where the risk of failure is like 95% chance. And then if you find something that could be the start of something like this, then you take your profit and run. It's like, in what world does that make sense? If there's a 95% chance of failure, if I put 20 of said bets, it's like one would actually make a discovery, then 19 others would not, and let's say they go down 50%, and the 20th, 1 in 20 they actually make a discovery, and I sold everything after a double, that's going to pay for one other stock, not 19. But it's so much stuff, and again, I did this myself when I started out. But when you think about it, it's like, what on earth am I doing? Because it always feels like there's a 50% chance of making a discovery hole. And especially so, I would say, how that relates to this market. Even if a company makes a discovery hole, there's nobody in this sector. There's nobody looking over your shoulder and seeing, it's like, oh my God, they just made that's a discovery hole. This should be up. All of a sudden it's like, hey, maybe there's a 10% chance that this will become a high grade mine worth, 500 million. It's like, there's nobody here. That's why the bets are so crazy and why you can buy so much success, because there's nobody keeping this sector fair. Because everybody that knows about the sector is already in, so they can't really buy unless they sell something else. So it's just, I mean, it's like being an insider. You get to see the hands turned up. It's like, this is what we found. Nice. Okay. Do I need to pay up for that information? Nope. Nobody cares. There's no buyer here that's like beating you to the punch. While you can have stuff like this going on in, you know, bubbles. Whereas like basically the CEO is calling people like retards for even thinking, you know, what on earth were you doing? It's absolute crazy how crazy the markets can be. So it's like, stop taking this sector seriously. It's like, you know, favorite line from Bob Moriarty. It's like, nobody knows anything. That's my default assumption. I think that should be everyone's default assumption. Someone is buying the stock or selling the stock. Assume they don't know anything. Assume it's you. Assume it's like, yeah, okay, now I got FOMO and now I get scared. You know, the more emotional side of you, let's say. Anyway, I should be talking some stocks as well. Because excuse me, I understand that. I mean, everybody should have a portfolio they're comfortable with. It's like, what makes me very comfortable with my very large exposure to junior miners is that I am bullish on the companies. I know why I own them. I know why I think they are too cheap not to own. But I can understand that if you're like, you know, only in trading sardines or only in pretty poor companies or whatever, and you don't really know, because like, okay, if you knew a lot about the companies, maybe you should probably not own them in that case. That makes it a lot more stressful, because then you're not even sure. You're waiting for that silver spike to $30-50 to bail you out. That's basically it. So you're living on a prayer. I mean, we know silver is gonna hit those numbers one day. It's like gold. In time it always goes up in nominal terms. So that's not the thing. But it's like, we don't know when that's gonna happen. We don't know if we'll have a correction first, etc., etc. But it's like, yeah, I guess that's my point. It's like, I'm very comfortable because I know I'm doing what is rational and right. And I think on average I have, you know, the median junior I own is far above the median quality of the overall junior sector, because there's like, I don't know, 2,000 juniors. Most of them I will not own at any point, because it's like I wouldn't have any conviction. I don't see how I'm gonna win. I don't see a winning condition. I can't. Again, it's like our job as value investors. I mean, it's kinda, especially in growth stories, it's kind of front running news and sentiment. We know that sentiment is low right now, very low. So we're buying now in order to front run the change between low to high. That's the only way to capture that. Buying when sentiment is low, because you know someday it's going to get high. So even with no change in the junior fundamentals, they're going to get a, I don't know, 200-300% boost typically on just the sentiment change. So that's one thing we're front running. That's the macro. That's like, should you have exposure to this sector? Right now I would say definitely yes. But I picked the actual companies based on what I think about the companies and yeah, the risk reward in them, because in that case sentiment becomes well, at least very high sentiment becomes a bonus. It's like Headwater Gold. Why do I own that? First of all, sentiment is low, prices tend to be low. I think this is dirt cheap. 4 earnings with Newcrest, 100% owned Discovery, 11 projects in total. I don't exactly remember, do I have the... No, I don't even have the valuation, so I have to go off the top of my head. Headwater is probably gonna bring in like 5 to 6 drill rigs this year, and will be drilling in primarily Nevada. Could they grow the value with how many discoveries do they have? Like, well, 2.5, I think. They're gonna be drilling Midas as well. Spring Peak, odds of that growing very high. I think the Katy discovery is gonna grow as well, because they also had good initial results, which according to the Kennerland study is obviously a good sign. If you have good early results, either you're very lucky and you hit the small portion where the system is actually good, or it's a robust system, so that's why you had such good results even though you were drilling semi-blind. So fast forward 8 months. Okay, now nobody cares. They haven't been able to drill for the last, what, like 6-7 months? So it's about to go from super boring, well, kind of boring, with little to no news flow, to 5 to 6 drill rigs and all that news flow which that will create, including a potential, even a new discovery at Midas North. But that's not something I'm banking on. If they find one mine, Headwater is going to be a success. They have 11 projects. They will drill quite a few projects this year. One is 100% owned. That's the Katy, 100% exposure. So if you divide that, the amount of targets, or just active targets, like 5 with 20, that's like 4 million Canadian per project. And 4 of those projects have Newcrest as earning. The major Newcrest is earning in. So Newcrest obviously sees potential, or at least believes that the team, Headwater team, are good enough to see the potential of a system which has a potential to become a mine. What would a mine be worth? Let's say 500 million of high grade. 10% of that is 50. They have, a bunch of them. And they're funded 25% plus a PFS. So yes, they will not capture the brunt of the I mean, if one project becomes a big success, yes, they'll get to keep 25% funded PFS plus a royalty. So it's obviously going to be worth quite a bit. Yeah, so like many irons in the fire, they need one success. They already have like 2.5 discoveries. And in this market, Newcrest is funding the whole damn thing, so there's no front running of a private placement anytime soon. They have 4 million in the bank. So it's like, people's like, how you know, dilution and you know, how we're going to raise money, etc. Newcrest is funding that on the 4 of the 5 projects that are going to get worked. No dilution risk. Newcrest is getting bought up by Newmont, so you know the total treasury when that goes through and they've done all the yada. I mean, we're talking billions of deep pocket. Does that mean that, hey, the new super Newmont might like say, hey, you know, this is not large enough for us anymore? Sure, but let's say, I don't know, let's say they spend 7 more millions, make a discovery or more, or at least get this field season, and then Newmont says, hey, this is too small for us, but good luck. That could potentially be like, I don't know, you know, several $1 million of free capital, and you get to retain 100% again. So I don't know if that's a blessing or a curse. I mean, if we go into a good sentiment environment, that's probably a good thing. Anyway, Tectonic Metals, easy story. Proven, you know, discovery. We know there's mineralization there at the Flat Gold project, and it's one of those stories. Like I think market cap might be what, 27. I think after the raise maybe 30 million. It's not super low, but at the same time that's like a 4+ kilometer gold in soil anomaly where you hit mineralization in all the historic holes, and looks to be kind of a snowline type reduced intrusion related gold system. So think about how big it could be, how many years worth of drilling, what the end game potentially again could be. We know that Donlin Creek is not too far off, which is a beast of like, I don't know, 40 million ounces. Do we need to know it's going to be another valley or a what's it called, Donlin Creek type discovery? Absolutely not. And we're not paying anywhere close to that. Donlin Creek, half of that I think was valued at, I don't know, let's see, what's it called, Nova Gold. 2.4, I guess up here it was, yeah, closer to like 3. So like 50% on of Donlin Creek has been valued, you know, up to 3 billion or more actually. Yeah, I think, yeah, definitely more. Up to 4 billion for 50% of Donlin Creek. So what chance of success is priced in? Very, very low, obviously. If there's a 5% chance that they will have half a Donlin, I think that would be very cheap. Let's just I'm gonna do it in 1 second. Okay, so let's say 2 billion. Let's say they're 30 million Canadian. 1 second, 2 billion. Okay. That's a 1.5% chance priced in that they will have something worth 2 billion. Of course, that's undiluted, but 1.5% chance of half a Donlin. I don't know what exactly they need to, you know, have a viable mine up there. I mean, it's kind of remote. Let's say, I don't know, 5 million, maybe actually more. I'm not 100% sure, but we know what the footprint is. This could be, well, they're gonna find something because like every hole hit, and they have just drilled it to like 150 meter depth and not even tested the whole strike. So in the future, or we don't know. We just know that it might be no viable deposit up to a 4 kilometer plus behemoth, and we're paying 30 million for it. That's it. If this turns out to be nothing, we're gonna lose money. If this turns out to be a viable mine, maybe, I don't know, like 5 million ounces, maybe in a higher sentiment environment, maybe 500 million or something. That's still quite a bit from 30 million right now. If this becomes a giant, we know that again half of Donlin Creek is has been valued at 4 billion. So that's one's like, if we could time travel, if they drill, have success, the story pops, or the Tectonic goes up 100%. That's great. On paper, you're up 100%. But you never know that if it's gonna, if that will be like here, and then, you know, they don't really find anything else. But if it actually turns out to be a giant deposit, we could have a trend like this, and that could be on average going up like 50% per year or something, more than that, given how if it's a disseminated system, given that it's concentrated in a sense, because obviously Great Bear, they had to drill hundreds and thousands of meters because it's a semi-nuggery load system. So they have to, you know, many close space drilling. Obviously we know that's like Snowline, they drill like, I don't know how many holes they have, like 30 holes, and you kind of know it's like, yeah, they probably have like 8 million ounces already. So this might have perhaps a pretty insane ROI, because like, okay, where these holes stopped, historic, we have no idea how deep they can go, how deep the mineralization goes. What happens if they pull in a 400 or 500 meter hole and it's just mineralized all the way through? All of a sudden, it's like boom. People are gonna think, well, this might be a giant. 4 or 5 million ounces easy. Then I could see a quantum leap. Inflection Resources. I have to go, I think I have to go quite quickly now because I'm already up to 50 minutes. Inflection Resources, super easy to, one second here, where is it? I mean, super easy to explain. It's like, what's the market cap? 20 million. They have like 1 million cash, 90 million enterprise value. I'm expecting the deal to be finalized with Anglo Gold any day now. And you can see how many targets they have. They have 1, 2, 3, 4, 5, 6 high priority targets. They have 6 moderate priority targets. They have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 targets still to be tested. So that's over 20 targets. I don't know how many they will, you know, will be drilling with Anglo Gold. I know a lot of people seem to be excited by Duck Creek, and I think that's what, you know, made Anglo Gold come out of the woodworks, so to say. Yeah, okay. 20 million, 90 million enterprise value. What's a copper gold mine worth in Australia? Especially, well, let's put it like this. If they grow, and it's like, yeah, the copper situation, the supply demand is increasingly favorable. So imagine if the supply demand gets better and better, and they grow throughout that time. I don't know what Anglo Gold would be after. Maybe a $1 billion mine. I mean, we know Cadia, but that's like several, or at least a few different deposits, and they call it the Cadia complex. But the Cadia complex, I remember looking at some, I think it was a report by UBS or something. They had put this was years back, but they put like a $10 billion value on Cadia, if I remember correctly. So you know, I don't think Duck Creek is going to be a, you know, 10. I don't think. It looks like it could have 2 intrusions, and they've already hit Bornite, and I think they hit blebs of Bornite above North Parks or Cowal, one of those mines, which is a $1 billion mine, or maybe a multi-billion dollar mine. It was like, we know the price is like, these guys have a bunch of ex-BHP people as their technical team. They're after major size deposit. They're not after any kind of signature. They're after big targets. So I'm thinking 1 billion plus is their, you know, that's their target price. 1 billion plus. It's at 20 million in market cap. Let's say one good discovery could be worth at least 250 million. Because they would get to keep 25% funded to PFS, get a royalty as well. So more than 25% actually, if you include the royalty. Still, but they wouldn't build that though. So it's like, yeah, if you account for that, you know, would be dilution. I obviously think they would be bought out in that case. But still, 250 million, let's say, theoretically, especially, you know, maybe not in the, you know, a sucky market like this, but like eventually, if they make a discovery, does indeed turn out to be, yeah, this is a discovery worth like $1 billion. This is a big copper gold mine. When we get to the sentiment environment, 250 million, I don't think that should be a big problem. Then we're talking a 10-bagger. And that's from a $1 billion discovery one. They have like 20 plus targets. What? So this can go, either they make absolutely no discovery and we lose money, or they can make 1, 2, 3, 4, 5 plus discoveries. We don't know. I just absolutely love the idea that's like, if you reverse calculate what chance of success is priced in, you know, not a big success chance is priced in. So it's like, you know, if this alone works, I could easily see a 10 plus bagger in time. If one target works, I could see a 10 plus bagger. And if it's a very large target, obviously higher than that, but still. Because obviously I like a 25% of 2 billion is 500 million. Then we're talking, you know, 20 plus bagger. Still, okay? Don't know exactly. I just know that if you, I mean, one could say like, if you just take the 20 targets divided by the market cap, there's $1 million Canadian of potential priced in for each target. 1 million Canadian. And you know that if one of these discoveries becomes something that's, you know, worth, who knows, but like maybe a lot. Especially in the future. Especially in Australia in the future. I just think it's absolutely ridiculous. Again, kind of odds you get here. Brixton Metals, oh geez, I really need to get going. Okay, I'm gonna rattle off the next ones quick. Brixton Metals, dirt cheap. BHP sized target at Camp Creek. They have a bunch of other targets. They have a JV with Ivanhoe Electric, which is Robert Friedland's vehicle of choice today for copper and stuff. What more? I mean, they have more the Trapper Gold target. I mean, what's the 62? I think they have 17, so like 45. Is it that low? Yeah, 45 million in basic enterprise value. 45. Okay, so take away the value for Trapper. Take away the value for Metal and all other targets in the Thorn Super District land package. Take away the Ivanhoe joint venture. Take away Langis and the Cobalt thing. Take away, I think, Atling Goldfields or whatever. What do you have left for Camp Creek? I honestly don't know. I mean, just Trapper alone, I think is like, I don't know, maybe, you know, 50 million? In that case, it would be negative implied enterprise value for Camp Creek, which got BHP interested. And all the other targets for free. So it is just mind-numbing. It's like, again, the opposite of this stuff. Here you paid for a reality that could not possibly come to be. Here you're paying for like, well, you're getting stuff for free. It's like if this was infinitely expensive, if you get stuff for cheap, that's infinitely for free, that's infinitely cheap. So it's like the polar opposite. So he's like, you know, what were you thinking? That's how I look at these juniors. Like when people are selling, there's not enough buyers out there. There's not enough retail people aware of this sector or have money. And somebody's selling. It's like, what are you thinking? Anyway. Fathom Nickel. I don't exactly know their 13, they're raising money. I'm participating. They actually have a discovery hole, hit a pretty good hole. So again, I think they are. I have no idea what that's going to turn out to be. I was like, is there $1 billion potential here? If you ask Quinton, yes, there's potential. Okay, how certain do you need to be? Well, not very much. I mean, 13 divided by 1 billion, even if you subtract like 30% for dilution, whatever, that's 700 million divided 13 divided by 700. So like no chance in hell priced in. I think it's a bit better than no chance in hell. So if this turns out to be a major nickel discovery, it could be, I don't know, 500 million, 1 billion, 1.5. Does it actually does it matter that much? No, it's pricing in a well, it's gonna be more, I guess, but it's like, let's say a 16%, 10% chance of finding something worth 160 million. If this legit becomes a viable nickel deposit, I mean, those can be sold for like 1.5 billion or more. So it's pricing in less than, well, let's say 1% of that happening. So if in reality there's a 5% chance that this turns out to be a major nickel discovery, 5%, 95% chance failure. That is, in that case, this is super cheap. Again, at face value, undiluted, but still, I like those kind of odds. If I need to be right 1 in 20, and I think it's like, hey, you know, I think there's at least a 15% chance. That's like, whoa, superb risk reward, like 200% undervalue. Goliath Resources, I mean, obviously beyond the discovery already. They're aiming at a resource in 2024. It's gone down quite a bit. They will be testing, they recently announced they will be testing more targets as well. I think the Shorebet zone and the neighboring zones, this is going to look cheap, and they have, you know, going to test discoveries as well. So this is a, in my opinion, probable growth story, and obviously what kind of a mine is being priced in at 45? Not, I mean, no mine really. It's pricing in, let's say, I don't know if it's actually close to, I don't know if the share count has been updated, but let's say it's 50. So it's pricing in a 10% chance of having a mine that's, you know, worth like around 500 one day, 500 million. And that's not even, you know, a world-class mine or anything like that. And this happens to be BC, underground mine, gravity assisted it appears to be, great metallurgy. So it's like this could be also a high margin. And in that case, 500 million is not a lot. I don't know, it's like, of course, I can't guarantee that, you know, it will be a high margin mine one day, but it's like, what would like 3 million ounces of potentially quite high grade ounces in BC would be worth? A lot more than 45 million, that's for sure. So one of those cases, like I wouldn't be super surprised if this became a 10 bagger in the next, I don't know, 2-3 years. And obviously it could be way more than that if they make even more discoveries. But that's probable growth. Condor Resources, I talked about that before. It's like, you know, basically the epitome of a high, you know, high risk, high reward play. But you could get a, if especially Pucamayo, which is the easiest one to test, I guess, if that actually becomes, if that is a, I mean, Mother Nature knows what's there. But if there is a multi-million ounce good grade deposit there, they could possibly prove that up from one drill campaign. Altamira Gold, I think I talked about them recently. It's one's like, I don't know what, down to 24 million. They have 600,000-700,000 ounces already. They have copper targets. They have that, what's it called? Maria Bonita discovery, which appears to be a gold porphyry system. Who knows? I mean, if that ends up being like 2 million ounces of near surface gold around, I don't know, 0.7 to 1 gram per ton with good metallurgy, and is close to the other 700,000 ounce deposit, yeah, that's probably going to be a mine. In Brazil, you can actually build a mine. It's got good infrastructure. And And they're working on environmental permits in the where the original deposit is already. I mean, this is not pricing in any sort of, low capex, heap leachable, multi-million ounce gold mine. It's just, I mean, that's the thing. It's like, I think all of these are no-brainers. I mean, I think they should be priced in, or pricing in more, obviously, and the upside potential should not be this high. Because they should be pricing in more than a chance in hell of actually having a mine, especially when you have like, Newcrest involved, Anglo Gold involved, BHP involved. It's like, it makes absolutely no sense. But hey, here we are. This is the stuff I'm excited about. I mean, I own more companies than that. Magna Mining, Line 1. It's like there's a bunch of it's like Novo even with their Hemi exploration, etc. So this is not an exclusive list, but it's like, I think this was a nice mix of high risk, because that's the whole point of this, diversifying away. And the thing is that any of these, and there's other, I mean, Magna Mining, for example, even though they're not exploring, I think that's like, I don't know, 200% undervalued already. And Jason wants to build that into a 3-mine producer within 5 years. I mean, obviously there's like 10-bagger potential in Magna if you compare it to the vision he has. Potential. I'm not saying it's going to happen, but potential. But that's not a high risk, high reward story. That's why I have a large position in Magna, because that's not really high risk. Anyway, Western Alaska, I mean, potential an intact CRD system, and they drilled out like 400 meters out of, I don't know how large that could be. Could be, again, I'm saying could be. But I think if they just double the strike, I think they already have a kind of a viable mine. And then everything outside of that is just gravy on top, and it could be much, much larger than that. It's just fascinating, fantastic. Dynasty Gold, don't know too much about this one, except that Rob McEwen recently took a stake. I think they're quite cheap. 16 million. They had some very impressive 1.5 meters, 246, 3 meters. Yeah, so I mean some real, like, kind of, Red Lake mine type hits. And when Mr. Red Lake gets in, it's like, again, what is priced in here? 16 million. Well, the actual Red Lake mine was worth, I don't know, a couple of billions at least. It's just one of those things. I have no idea if this is going to if they have a 5% chance of, making half a Red Lake discovery or something. It's pricing in a 10% chance of them having something worth like 160 million. If they actually find something that's a viable mine, and it's like, I don't know, 1.52 million ounces of like really high grade, that could be worth $1 billion. Do I need to know that? Am I 90% sure, even 50% sure that that's going to happen? Absolutely not. I have no idea. Mother Nature knows exactly what's down there. I have no idea. I just know it's not priced in anything like that. And like, if Rob McEwen thinks, hey, this is a nice bet, why not? It's like the worst case scenario. Okay, this goes down 50% or whatever. They have other projects. What if they're Thunder Bay or Thunder Cloud, where they're getting these abnormal hits? What if that is a legit high grade Red Lake deposit? This is gonna look absurdly cheap one day. Gold 79, super cheap, multiple projects. Gold chain, they've hit really good there. District scale opportunity. Share structure is really bad, meaning there's a lot of shares out and warrants, etc. I own some warrants as well. But it's like, from a valuation perspective, pricing in no chance in hell that they have any mine potential there. I think market is wrong. Pacific Ridge also, I think I bought some picks today actually. 22.7 million. I think they have like 7 million in cash, enterprise value of 15. They have a joint venture with Well, they have, I think, on joint venture earning with like Antofagasta on their other projects, and they have Clayule, and they're going to be targeting other targets within Clayule and extending the Clayule where they've already hit. I mean, what chance of success are like, you know, this market cap, and forgetting about the joint Antofagasta thing, it's like, what chance of success is priced in that this is a legit copper gold mine in BC of all places? Almost no chance. Is that fair? I don't think so. I don't think they would be able to raise, and they will also own 100% of it right now. Where did they? Okay, I thought they did a recent raise. Maybe they didn't. Anyway, I think they have like 7 million. Juggernaut Exploration, 5.65 million market cap. They're gonna be drilling 3 targets. Divide that by 3. There's no chance. The market is pricing in no chance in hell of finding anything. Okay, if there's a 5% chance of on each target, I think this is cheap. Or that's probably very cheap on a 5% chance of success. Rackla Metals, same thing there, intrusion related gold target. It's very early stage, but it's like, yeah, we know, you know, if you find another valley, etc. I mean, what's the market cap? Yeah, but like 11 million. So it's like, I mean, the thing is like, anytime one of these stories don't pan out, there's always people like getting butt hurt and pissed off, and it's like, oh, you like this stock, it's down. It's like, yeah, the whole thing is that these could have 90% plus chance of failure, and they could still be absolute no-brainer buys in a diversified portfolio. That's what's so fun. It's like, when you get shit, let's say, oh, this story didn't work out, but you're like, yeah, but I made it all back and more in these other. But that's not something to talk about, because most people have no idea how you make money in a high risk, high reward. It's not like to be able to win in poker, I won every hand. Absolutely not. In PLO, you might have, you know, on average, like, and that's, I mean, high if that would be in the junior sector, but it's like, maybe, I mean, if you have aces and some random cards, you might have a, you know, 64% win chance or something. Obviously in no limit hold'em, that would be around 82, 83, but still, it's like, no, it's just, if you make good mathematical bets and you can live to tell the tale, because I would never go all in on any of these stories. This could have, Rackla could have, we don't know, nobody knows, and Mother Nature knows what's there already, but theoretically, if we knew for sure there would be a 70% chance, no, 20% chance of finding another valley, this would be absurdly cheap. Let's say valley is going to be worth, because this is an even better infrastructure, but it's like 500 million. So that's like 100 million in risk adjusted expected value. 20% of 100, 500 million. So this should be a 9-bagger already in that case. I mean, that's how cheap it would be. It's like undervalued by 900%. But I would never go all in, because there's still, you know, 80% chance of failure. But if you just bundle up a bunch of these, where it's like retardedly cheap on a high risk, high reward, risk reward basis. So every single one of these, if they have a success, they're going to pay off more than they should, because they should never have been this cheap. So that means you need even lower hit rate. Because let's say in a fair market, maybe you would need, I don't know, 5 of these to, you know, turn out really well to pay for the other 15 or something. And well, I actually wrote something. yeah, 5 companies. If they just return 300%, that's not blue sky, obviously, but it's like 300+%. They would, everything on top of that would be gravy to the entire portfolio. And some of these companies are so cheap. There's like, if they make it work, one that hits blue sky out of these. I mean, Brixton, BHP size price, Fathom Nickel, maybe, major nickel discovery. It's like Tectonic Metals, hey, a Donlin Creek or a valley or whatever. It's like, it's just insane. Or Eskay Mining, another, Eskay Creek. I mean, we're not talking 300% returns if any of these hit like blue sky. Condor is like, I don't know, 8 million ounces, like 1.5 billion from whatever. It's like 40 baggers, or more than that probably, but you get my point. It's like, you could make a killing if you had, if 5 of these turned out to hit blue sky. If you held them through the entire time for 3 years or whatever, it's like when they got acquired, until they got acquired or something. If you could be ridiculed for being wrong on like 15 other stories, and you could still make an absolute killing. But of course nobody would understand that, because all you would be hearing about is the 15 that went to zero or whatever. And if you have like, I mean, let's say you have 15, let's say you have, I was gonna say, 1% in niche or whatever. It's like, yeah, okay, let's say they will get cut in half. That's like minus 7.5% of your portfolio, or to your portfolio. That's like a walk in the park in this sector anyway. So it's like, I have a lot of losses. I have a lot of paper losses, or I've taken a lot of paper losses, etc. But typically, they might be high risk, high reward stories where it's like, I'm not going, 30%. I've been all in once, and I regret that to this day. Anyway, Eskay Mining, testing a bunch of targets. If they find an Eskay Creek or a Skeena type deposit, obviously. Eskay Creek, the original, is like $3-4 billion worth today. Cartier Silver, it's like, who knows, maybe they have some, mini Iska there or something. I think it's quite cheap. You also get shares in Eloro. Ophir Gold, they're working on lithium up in Quebec. They have like the vice president of exploration from Patriot Battery Metals. Patriot is obviously this one here, so it's like, yeah, I think he knows something about where to find lithium, etc. in Quebec. So that's was my whole rationale. It's nothing fancy, and I think they're valued at, I don't know, 25 million or something, and Patriot is at 1.7 billion. So it's like, if they hit half of that, it's like, yeah, I would be ecstatic. And obviously they're not pricing in a 10% chance of that happening even. So it's like, hey, maybe it's a pretty good risk reward. District Metals, just multi-asseted. I mean, it's the real kicker, I guess, is their huge option on the vanadium uranium deposit. It's like the second largest uranium deposit in the world or something like that. Canadian Maverick, that this is an interesting story, very under the radar, extremely tight share structure. They have, I think they have, option Nevesca property to Knoll and the equity purchase. I think this is the Argentinian asset. Province of Salto, Argentina. Okay, so they did a deal with whatever they're called, Noel. So I mean, if they make some, how much will they keep? Okay, 3% NSR. Well, anyway, okay, so they might get some cash, etc., for their lithium projects in Argentina. And the big thing is that they recently acquired 100% interest in the prolific Bay Lithium District, partnering with renowned prospector Sean Ryan. Sean Ryan, as many will know, is a famous gold prospector. you know, from White Gold, and actually I think he sold some of the land to like Labrador Gold, etc. You know, where Newfound is right now. So he's one of the most famous prospectors, obviously super smart. So they got how much land? 40,000 hectares, which is obviously large, and you can read the details. I think this and Ophir Gold are my only lithium place, I think. And it's just the same. It's like same thing. It's okay. They have like some of the best sediment samples. So there's a lot of lithium and other pathfinder metals, pathfinder minerals kicking around in these 40,000 hectare land package. It's like, do I know that they're gonna find a lithium deposit, or that they're, you know, spodumene bearing pegmatites? Because there's like, I think hundreds of has over 100 pegmatite dikes mapped along the shore bites. So it's like there's pegmatites all over the place. Are they spodumene bearing? I have no idea. They're gonna find out this summer. It's like, if they find spodumene, etc., who knows? Maybe. It's like I listened to an interview with the CEO, and he's like, "Hey, if they confirm them to be spodumene bearing, he's like, yeah, this could be 100-200 million market cap all of a sudden." Do I know that? No, but I know how high, obviously, some of these Canadian lithium discoveries can get valued. And again, it's like, what's Patriot is at 1.7 billion. If we take, or I think it was 1.7 or something, half of that is like, what chance of success is priced in to find even half of what Patriot has? Obviously not a lot. It's like way below 10%, like 3%. So I mean, yeah, it's again one of those high risk, high reward stories. Yeah, so and of course Alpha Exploration, they have been putting out good news. Well, it's like, I was gonna say, what they are showing is that very quick turnaround, and they're growing the system. It's wide open, like 7-kilometer long trend, etc. So that it appears there's a huge system, and like I think. It's gonna fancy. Michael Hopley, he's Alpha President CEO. This is obviously a heavyweight. Check his resume. The Berna prospect, and this is only one of their many projects. The Berna prospect is continuing to demonstrate it has the potential to return a multi-million ounce gold deposit, the Hill 52, and then he lists a bunch of targets. You can see 7.2 kilometer trend, 2.2 in this direction. And they've just started, you know, scratching on this surface. So given, I mean, how quickly they already have assays out. So I mean, their turnaround time is something that Canadian explorers would dream about. But yeah, okay, so let's jump forward a year or two. I mean, in a year or two, I think it will be pretty obvious if it is indeed a multi-million ounce gold system. What's the market cap? 45. Imagine if this is like, I don't know, 5 million plus ounce gold mine. It's like, that's not gonna cut it for. I mean, it's in Eritrea, so it's not the best jurisdiction. It's like, somebody's gonna buy that in that case. I'm pretty sure about that. Maybe the Chinese, who knows? But still, I mean, I hope you get the, and I just outlined some, quick notes, but I think I actually highlighted them better when I just talked about it. Like, I hope it goes through what I'm talking about. It's like how I'm playing given my background in poker. What is priced in? What's the risk reward here? Any stock can go to zero. But that's not the point. It's like, how much can I gain with the risk of it going to zero? And now I think the market is, again, the opposite of this. Absolutely batshit crazy. What are you thinking? So from a risk-reward perspective, I think all of these are great. Absolutely great. It's like maybe 200% undervalued on average. But I can't, even if one is 300% or two is 300% undervalued and the rest are 200% undervalued, I still can't go all in 2 stocks because it's still high risk, high reward. So it's like, yeah, even if the chance of success is only 10%, but they're pricing in a 3% chance, so it's more than 200% undervalued, or it should be 200% higher. I can't, well, first of all, literally can't take, spend half. I don't have, I have a lot of my money tied up, but I even can't get in at this price for, I was going to say, without moving the market, obviously. But it's just absolutely obscene. And then you have stuff like Magna Mining and, Line 1 and I forget about companies. But it's like, Nevada King is like, Trigon Metals, also a high risk, high reward story. Timberline, Newfound Gold, but that's like, that's past. And Allura, obviously. But they're not the kind of same high risk, high reward club. It's like they have legit, like they already have a big deposit typically. But that's how I play it. So it's like a good mathematical bet. The best, even if you pretend that one bet here is like on a risk adjusted basis, it should be 600% higher already. So that's obviously like absolutely bonkers cheap, but you still don't want to go all in because you don't know if it's gonna, if there's a 80% chance of failure. You don't want to risk your, half or more of your entire portfolio with a 20% chance of success. Even if, if success happens, over time you might have a, 10 bagged your portfolio. Because there's an 80% chance of success you will not. And of course, right now when banked success is selling so cheap, again, I don't necessarily love early stage explorers. Well, I kind of like them, but it's like banked success is selling so cheap, but still, I cannot turn a blind eye to actual, stores that are pretty much already discoveries. But it's like, okay, what would be the highest risk ones? It's like Juggernaut, obviously, because they don't really have that discovery hole yet even. Everyone else, I think, well, Condor also doesn't have that discovery hole yet. Rackla as well. One could say that about Eskay Mining, I guess, but they already have mineralization. Cartier Silver as well. Ophir, Maverick. The rest have actually, they already have something. They know that they found a, mineralized system. But it's also, like typical, it's like, well, Ophir and Maverick, given that they are in the hottest commodity right now, which typically has superb economics as well, their blue sky will be high, and they can really get rewarded. If these other companies would be in lithium with the the same relative success they have now, they would be trading way higher than they are. Anyway, I hope it goes through. Again, it's like, don't bet the farm. I don't know if any of these are going to work out. Zero might work out, up to all could work out. My belief is just that the prices are way too low. They're pricing in way too low chance of success. So in the event that any one of these turn out to be as good as we hope, I think one stands to make more money than one should even be able to. Because it makes no sense why some of these companies are pricing in like a 1.5 to 2% chance of finding something that could be an economic deposit. Because if that's the case, I doubt that you would have majors getting involved even. And this is what gets me really. This is what keeps me in the game. I'm looking at what these companies could become. So that's how do you have greed at lows? Thinking further ahead. Man, imagine if I'm buying this junior and they turn out to have, you know, this in 2 years. Man, I'm gonna make a killing. Do you think I care about where the price of silver or gold or copper does in that case? Let's say you have one of these companies go from 0 million ounces to like 5 million ounces in 2-3 years. Is that not a bit more important than where the paper gold price is trading today, or a week from now, or a month, or a year from now? And what happens if so small chance of success is priced in that if that turns out to be the case, you'll probably make 20 times your money? I don't know how much, again, it's like how much would gold and silver need to go down for that not to be a profitable bet? Well, this really became a long ass video. Again, assume I am biased with all these companies. I own all of them, I'm pretty sure, yeah. And, you know, some are banner sponsors as well. So just keep that in mind. I can guarantee that you might lose money on all of these. It's my subjective opinion for the reasons I stated. I think on average these are just absurdly cheap. And it's not like these are the only ones. It's not like, you know, there's no other good stories. Like you pick the companies you're comfortable with. I'm just explaining that to me. I'm bullish about I shouldn't say I'm bullish on this company. I'm bullish on the risk reward in these companies. And I think I easily could have a 50% failure rate. And when we get into a higher sentiment environment again, when success is actually priced in and the other 50% of these companies have material success, they're gonna more than take care of the 10 that got cut in half or more. That's my view. In my opinion, it's like I'm so bullish I can't even describe it. So I personally have no idea how people can, barely be hanging on in this sector. I don't know what other market or sector you would get bets like this right now. Certainly not buying Nvidia. But yeah, so again, that's what that's what keeps me bullish. Looking farther ahead, what could this become? What could this become? And then compared to today's price, then I get bullish. Also knowing that's like, because everybody looks at price of gold and silver and waiting for that to bail them out. The thesis for all of these is that the fundamentals will be the key to success, not the price of gold or silver or lithium or copper. It's that the management teams of these companies will create so much value that I won't even care about where the prices of metals will be. Kinda. Yeah, thanks for listening. Again, do your own due diligence. Don't invest money you cannot afford to lose. Don't invest money you will need soon, because there's nothing worse than buying something and needing to because who knows when this bottom of this sector actually is in. I have no idea how dumb this sector can get. I mean, I think it's just absolutely ridiculous, these juniors already, but they can always get cheaper. So it's like, worst feeling I know is like when you're forced to sell something, well, you buy something that's really cheap and then you need the money. And let's say sentiment has gotten worse, so people are even dumber and they sell even lower. To have to sell to someone when you know you're giving, you're giving away, it's like one of the best opportunities, like 8 years. That's not a fun feeling. Anyway, take care. Thanks for listening. Bye.